What's up, everyone? It's Scotty with MoneyVest. So the first week of 2024 is now officially in the books, and we did see a little bit of rotation out of big tech, out of your Magnificent Seven over to other parts of the market, and that's exactly what we are going to discuss in this video. Make sure that you drop a like, subscribe to the channel. That's all I'm asking in return. And of course, if you do want to join, be a part of our MoneyVest community, I have extended that sale, the 16% annual discount, for a couple more days because I've been getting a lot of messages for people who want to join, but the sale ended. So link's going to be down below if you are interested in taking advantage of that while it's still available. And of course, you get access to all the members only private videos, all the Excel spreadsheets, all the Discord channels, including trade alerts, options that I highly encourage everyone to take advantage of. And of course, a lot of other engagement with investors, of course, traders globally. These are very, very successful people sharing a lot of their experience and tips and strategies and all the mistakes all in one place. So link's going to be down below with over 20 plus Discord channels. And definitely do check out my Instagram. My handle is going to be CastWRP. We'd love to have you on board and connect with you there. Also, I do post a lot of interesting stories. Now I'm back at my home in Dubai, and we'll be sharing a lot of interesting and amazing stories, motivation stuff, portfolio updates. Everything's going to be available with the link down below, so definitely do check that out as well. So this is where we are when it comes to the fear and greed index. We are at an extreme fear at the moment. So of course, 76, 75, anything that's over 75, of course, considered to be a little bit more on the extreme fear side here. So what you will notice is that the markets, of course, kind of heading into 2024, we're kind of coming into this year with a very optimistic outlook of 2024. We've seen a very significant rally. We've gotten to a point where, of course, we were overbought, we were overextended, we were coming into this year with extreme greed. So it is not surprising for us to see the markets roll over the way it did on the day today, especially when you consider the NASDAQ, which is tech heavy, and the S&P 500. The Dow actually did quite well. The Dow held up really well on the day. So S&P 500 closes lower to begin 2024. NASDAQ notches the worst day since October as well. So the S&P fell Tuesday, the first trading day of the year, as bond yields inched a little bit higher and investors took some money off the table following a surprisingly strong 2023. This is exactly what we had discussed in our previous videos. What did I say? What did we talk about? I specifically mentioned that, look, after 2023 is over, there is going to be some potential de-risking or profit-taking environment because investors want to push their tax bills to another year. So if you're selling in January of 2024, of course, you don't have to pay for those capital gains taxes until 2025 tax day. So that is a good 12, 16 months until you have to kind of realize those taxes and pay for it. So as a result, investors are very much motivated to start de-risking a little bit or taking some profits off the table considering how strong 2023 was. So it is a very, very normal thing. And when you pile on top of that the overbought, overextended conditions, this is nothing new. This has happened over and over again. And the markets will move in cycles like this where we become overbought, we become oversold, we become overbought, we become oversold. And that's just going to repeat itself over and over again. And right now, of course, we were overbought, we came down, or we're potentially on our way down. And once we get oversold, that's exactly why we need to get our cash ready. We need to start deploying in these opportunities. When the markets do sell off and become oversold, that's when we pounce. That's when we start allocating and deploying more cash. And that's exactly why we turn the dial for why we want to be more aggressive in these areas and be a little bit more cautious in over here, right? When the markets are overbought. So cautious over here, aggressive over here. That's very simple. That's the cyclical nature of the market that I'm trying to explain for a long time. Apple here also did drop a little bit. So Apple fell close to 3% or 4% after we got a downgrade from the member of the Magnificent Seven market leaders basket to an underweight rating. And this was coming from Barclays. So they downgraded Apple. It dropped a little bit over 3 to 4%. But nonetheless, it was overbought to begin with. So there is, again, a reason for these stocks to drop on a technical basis. Big short investor Steve Eisman worries everybody is coming into the year feeling too good and sees room for disappointment. And one of the things that, again, we have discussed in our previous videos is what? It is the idea of repricing, because the market is pushing higher on the back of this optimism that the Federal Reserve is going to cut rates 6 to 7 times, if not more, in 2024. That is the expectation, right? So what happens is when you have high expectations and you underdeliver, that is disappointment. When you have low expectations and you overdeliver, that is excitement, right? And the markets right now are just setting themselves up for potential disappointment. You see how I use the word potential? Because it's not happened yet. The market's rallying on this high expectation of 7 to 8 rate cuts. If the Federal Reserve matches their expectation, that's great. That's fantastic. That's exactly what the market was expecting. But if for any reason the Federal Reserve does not match their expectation and they underdeliver on the rate cuts, that is disappointment. That is repricing risk. That is uncertainty, which can lead to markets pulling back or selling off, because that's new information the markets will need to price in. So that is exactly what we need to be prepared for. We need to be cautious for that scenario. And of course, if that happens, that's only going to create opportunities for us to once again do what? Dollar cost average, buy. It's going to open up that window. Volatility may spike, and it's going to create an environment to once again be a little bit more aggressive. So he says, long term, I'm still very bullish, but near term, I just worried that everybody's coming into the year feeling too good, is what he said. And again, Magnificent 7 definitely seeing a little bit of a pullback. Apple shares obviously dropping 4% after the Barclays downgrade. And look at this rotation. Meta, Google, Amazon, Apple, Microsoft, Nvidia, Broadcom, AMD, the entire semiconductors. I did trim my AMD for a 40% profit. I did sell calls on Amazon that are up. I did close out on my calls on Tesla and Enphase for 50 to 70% profit. So again, if you want to get access to all the options alerts as well, which I think are going to be very useful for you, links are going to be down below, because the hit rate, the probability of success, I'm not kidding, when you're selling options is really, really high. I mean, there's a very high probability for you to make money if you are selling options instead of constantly buying and trying to predict where the prices are going to go. Simply look at selling options, understand what it takes to sell an option on the correct way, which is selling calls and selling puts. And from experience and from everything that I've seen from all of our members, I can tell you that the probability of success is really, really high, and it allows you to kind of play both sides. It allows you to kind of hedge your potential downside in a very, very smart way and optimize your portfolio to the best of its ability to generate cash by using the existing cash and existing shares in your portfolio. So we're not reinventing the wheel here. We're simply doing what works. So healthcare, energy, real estate, utilities, consumer defensives, all of them pushing up. So we're definitely seeing a little bit of rotation out of tech and growth over to more defensive parts of the market. In the last 1 week, of course, a little bit of a split market. In the last 1 month, of course, everything is green still. And of course, we do have orange juice for the win, starting off the year on a very strong foot, pushing up over 3%. Cocoa prices, rough rice, live cattle, coffee, everything pushing up with canola, soybeans, oats, wheat, lean hog, and ethanol pulling back, with Bitcoin here a little bit over 45,000 and Ether just over 2,300 as well. So if we come over to Bitcoin, very nice breakout over 45,000. So that's where we are. The next target is going to be all the way up. Let's take a quick look. That is going to be all the way up to 48 to 51,000. So inside this red rectangle. And right now we're starting to see a very nice breakout from this consolidation range. Ether here also pushing up to almost 2,400. It's already at a resistance. And if it does end up breaking out further, next target is going to be 3,500 for Ethereum. Volatility dropped right back down. So it was at one point up to over 6%, 12 to 14%, but now only up 6%. And of course, if you take a look at the S&P 500, recovered a little bit to some extent. So we did see some type of recovery, so but only down about 0.5% now. So buyers did step in, and with the NASDAQ here also creating some recovery, not fully, but of course at some point it was down close to 2%, but still down over 1.6% on the day, with the futures here slightly lower on the day, with the 10-year treasuries now pushing back up to 3.9.5% on the day. And of course, next target's going to be back up to 4 if we do see a little bit of that rebound for 10-year treasuries. So going over to crude oil prices, again, they continue to drop further, getting rejected at those resistances, and next support is going to be $66 a barrel. So that right there is going to be that level to watch. Of course, consistently trading inside this downtrending channel of lower highs and lower lows, and continues to kind of be very, very weak from a technical perspective. And next support really is going to be $66, $67 a barrel for crude oil. Talking a little bit about the S&P 500 now, so SPX. You'll notice once again coming down this week. It is starting off slightly down about 0.5% after seeing what 1, 2, 3, 4, 5, 6, 7, 8, 9 consistent weeks of green. I have no doubt in my mind that S&P 500 will most likely end this week on a red note and basically start us off negative on a year-to-date basis, and support level is going to stay put at around 47.25. So this right here is going to be that level, and resistance pretty much the all-time high, within striking distance of its all-time high. And next support, if we do end up breaking down further, is going to be 4,600 on the S&P as well. But incredibly overbought even on a weekly time frame. That's exactly why I'm selling calls and I'm cautiously waiting for opportunities, waiting to deploy cash for when there is going to be deals in the market. Talking about the NASDAQ, same story, starting to pull back a little bit on a weekly time frame, 8 consistent weeks of green, very, very extended, overbought RSI and MACD, and did drop quite a bit on the day. Next support really is going to be down to 14,600. So this right here is going to be that level to keep in mind, all the way down to 14,400. So pretty much that 200-point range on the NASDAQ is going to be that support, all the way down to 13,800. So sub 14K is going to be that next level, with a resistance sitting put at 15,400 on the NASDAQ. Apple here dropping pretty aggressively, so further drop on the day here, down a little bit over 3.5%, so definitely breaking it down below that support of 190. So we're going to go ahead and turn this level back into a resistance. This was not a surprising thing because, again, take a look at the RSI, take a look at the MACD. It was overbought, and it only took us 3 to 4 days to get the RSI down to 35. You see how markets take staircases up, elevators down, because the selling pressure becomes so violent, so aggressive, so fast that it doesn't take long for us to basically come from overbought to oversold levels. So 180 is going to be that support level to watch. So this right here is going to be that level to keep in mind for Apple, all the way down to $165. At $165, this is going to be a no-brainer buying opportunity for me, because it's going to be down over 20% from its all-time highs, close to 20%, so 17%, and we've seen multiple 20% instances for Apple, and it almost always recovers really, really well. Almost, because now, once again, we're down, and we'll see if it recovers back to all-time highs eventually, but of course coming down pretty aggressively on the day today. Amazon also down over 1.3%, still coming down to its support at 148. So this right here is going to be that support level to watch, and no doubt RSI, MACD overbought, overextended, so starting to come down once again. And if it does end up breaking down below 148, the next support is going to be down to $135. So this right here is going to be that next level to keep in mind for Amazon moving forward, and of course resistance staying put at close to $161 per share. Talking about Tesla, and Tesla here on the day, basically flat, so not really moving all that much. Resistance is going to stay put at $269, close to $270. I did sell a couple more calls on a Tesla, way out of the money, strikes I think close to $300. There's a massive supply up to 300, so it's gonna be a while. It's gonna take some time for Tesla to get up to those levels, in my opinion. And support level is going to stay put roughly around $241. So this right here is going to be that level of support, and resistance all the way up to $269, $270 for Tesla. Continues to kind of trade inside this uptrend, a little bit of those higher highs and higher lows. Talking about NVIDIA on the day, slightly pulling back from that resistance, not a surprise. So this right here was that level of resistance at $490, close to $500 per share for NVIDIA, and right now we're seeing a little bit of a pullback once again. So support level is going to stay put inside this green rectangle, and that's going to be sitting roughly at around $400 per share. So that's going to be that low 400s, resistance all the way up to $496, close to $500 per share for NVIDIA. Lots of consolidation, so it's really just been trading sideways in that range, as we already know. So massive resistance at 500, massive support at 400, and it's the $100 range within which it's been trading. Advanced Micro Devices, it's been a long time coming. Massive pullback, down almost 6%. RSI, MACD coming down, so it's not a surprise. Support level is going to stay put down to $130. So this right here is going to be that level to watch for AMD. Resistance all the way up to 156 for the stock as well. And of course, that's going to be in line with that previous almost all-time high where we got rejected in the past for Advanced Micro Devices. So that is going to be that level to keep in mind. Support level next is going to be down to $130. PayPal on the day, basically flat, so outperforming on the market. Starting off the year with some outperformance here, up over 8 basis points. That's fantastic. Earnings season is just going to get started here very soon. So they are going to report in the towards the end of January, so early February, for the final fourth quarter. And again, that's going to be the one full quarter under the new CEO, Alex Chriss, and support level is going to stay put down to $56 per share, resistance at 65. Just a lot of consolidation sideways for PayPal, and this is going to be the overall uptrend of higher highs and higher lows as well. Talking about Visa, and Visa here also slightly down about 0.5%. Lots of consolidation sideways, but support level is going to stay put down to $245 and $250. So we've seen a lot of sideways trading for Visa, lots of consolidation. But like I said, very strong support inside this green rectangle for the stock in the 245 and 250 range at the moment. Talking about Meta platforms, and Meta here continues to trade in this uptrend, but it's obviously selling off down 2%, which is again not a surprise. This should not be shocking to anyone because this is something that we have already discussed over and over and over again on the channel. And this is the overall uptrending channel within the trend with the higher highs and the higher lows. So if it does end up pulling back, support level is going to stay put inside this green rectangle, sitting roughly at around $315 to $330 per share for Meta, with of course a resistance staying put here at this higher high. So that is going to be that level to keep in mind. Of course, that's exactly where we are getting rejected, and like I said, support level between 315 and 330 for Meta. Talking about Netflix, and Netflix here also pulling back quite dramatically, down over 3.7%. Not a surprise, breaking down below that support, which will turn into a resistance again, and next target and support level is going to stay put down to 450, all the way down to as low as $345, $350. That's going to be in line with this previous resistance, support, and of course a potential gap that we may need to fill if Netflix comes all the way down to those levels. But of course, if it comes down to sub 300, that is actually going to be a very nice potential opportunity, dollar cost average, or maybe even take a trade on the long side on Netflix. So that is going to be a next level support to watch for this stock. But of course, it's going to take some time to get down there, because it's going to be pretty brutal sell-off of over 30-40%. Next up, Google on the day also selling off close to 1%, so it's already at a resistance, so it's starting to pull right back down. It's not a surprise, and support level is going to stay put down to $126 per share for Google. And of course, we are seeing a lot of consolidation sideways, a lot of resistance here at around $140, with a massive support sitting at $126 for Google as well. So that is going to be that consolidation. That's going to be that support level to watch for Google. Microsoft, on the other hand, also pulling back down over 1.3%. Support level is going to stay put down to $366. So that is going to be that level to keep in mind, with the resistance up to $384. So that is a lot of consolidation sideways for Microsoft. It's kind of validating that support right now at $366, all the way down to as low as $340. Another really important support level to watch for Microsoft. And finally, we've got Costco and Enphase, and Costco here on the day pulling back also down a little bit over 1.4%. Next support really is going to be down to $603. So that is going to be that next support level to watch. Of course, we're starting to see overbought conditions, MACD's crossing below that signal line, RSI is coming down. So we are coming from a very, very overbought, overextended levels to now normalizing a little bit. So I do believe that Costco maybe has some more potential downside, considering how much it's already rallied and it's gone parabolically up quite impressively. Enphase here just a little bit under 132. So again, I did close out my calls on Enphase with, I believe, a close to 50% profit, and support level is going to stay put inside this green rectangle in the low 100s. Resistance all the way up to $151 for Enphase as well. This is still one of my top picks for 2024 as interest rates continue to potentially come down, and I do believe Enphase is going to do really well this year. So hope you all enjoyed this video and a complete update on the markets. Don't be scared. Don't be afraid of these pullbacks. This is part of the market cycles and the nature of that cyclicality, of that pendulum that kind of swings from one end to the other. We just have to be aware of where we are in that pendulum, in that swing, what environment we're in, and of course, take advantage of those opportunities when they do present themselves. So if you want to get access to all the alerts, link's going to be down below. I'd love to have you on board. There is a 16% annual discount that we've extended for a couple more days for New Year's. So definitely do check that out. And as always, happy investing. I'll see you all in the next video.